Silver just crossed $120, and if you think that move is already over, you might be making the same mistake most people make at the start of every major market shift. Because here's the truth, very few are talking about openly. The biggest money doesn't rush in at the headlines. It positions quietly before the real move begins. What we're seeing right now in silver is not the end of a rally. It's the moment smart money has been waiting for, while most retail investors are still frozen, asking if it's too late. Think about this for a second. Every major asset move in history looked expensive at the early breakout stage. Gold at 2,000 looked crazy to most people. Now it's far beyond that. Bitcoin at 20,000 was called a bubble. We all know how that story played out. Silver at 120 feels shocking today only because people are anchored to old prices. But the market doesn't care about our comfort zones. It only responds to pressure, supply, and capital flows. And right now, all three are lining up. Before we go deeper, if you want clear, no-nonsense market stories like this that help you think ahead instead of reacting late, make sure you like this video and subscribe to the channel. On Silver Reset, we focus on understanding where money is quietly moving before it becomes obvious everywhere else. Subscribing now helps you stay positioned, not panicked. Now let's slow this down, because this isn't about hype, it's about behavior. When silver pushed through $100, most people expected a pullback. When it hit 110, fear started creeping in. At 120, hesitation turned into disbelief. That disbelief is important. Markets climb the wall of worry, and silver is doing exactly that. The louder the doubts get, the stronger the underlying move usually is. What smart money understands is something retail investors often miss. Big moves don't start with excitement. They start with tension. Institutions don't buy because something already went up. They buy because the conditions make it almost impossible for price to stay where it is. And silver right now is trapped between rising global demand and a supply system that simply cannot respond fast enough. Industrial demand alone has changed the silver story completely. This is no longer just a precious metal people stack in vaults. Silver is essential for energy, technology, defense systems, and infrastructure upgrades happening worldwide. Every solar panel, every advanced circuit, every electrification project quietly consumes silver, and that demand doesn't care about price predictions on social media. It's structural, long-term, and growing. At the same time, mining supply hasn't kept up. New silver mines take years, sometimes decades, to bring online. And many silver producers aren't pure silver miners at all. They're byproduct miners, meaning silver output depends on other metals being profitable. That creates a ceiling on supply that price alone can't instantly fix. This is why $120 matters. It's a signal that the old balance is breaking. Here's where psychology comes in. Retail investors tend to wait for confirmation that feels safe. They want pullbacks, perfect entries, and clear tops. Smart money plays a different game. It looks for moments when the crowd is divided. Half excited, half scared. That's exactly where silver is now. Some are calling for 150. Others are saying this is the top. That split tells you we're still early in the broader cycle. Another thing most people underestimate is how fast narratives shift. A few months ago, silver was barely discussed outside niche circles. Now it's headline news. That transition phase is dangerous for late buyers, but incredibly powerful for early positioning. Once the mainstream consensus agrees silver is going higher, the easy part of the move is already gone. On Silver Reset, we pay close attention to what's happening beneath the surface. Not just price, but flows, vault movements, institutional behavior, global policy decisions. When you combine all of that, one message keeps repeating itself. Large players are not selling into this strength. They're absorbing dips quietly, letting volatility shake out weak hands. And volatility is exactly what scares most people away at the wrong time. Sharp moves up, quick pullbacks, aggressive headlines. That's how markets test conviction. If silver were truly finished, you'd see calm. You'd see fading interest. Instead, we're seeing stress, pressure, urgency. Those are signs of a market adjusting to a new reality. The biggest mistake you can make right now is assuming that because silver moved fast, it can't move further. Markets don't move in straight lines, but they do move in phases. Accumulation, breakout, expansion. $120 looks like a breakout number, not an exhaustion point. The expansion phase is where price surprises even the believers. Ask yourself this honestly. If silver pulls back $10 or $15, will the long-term demand disappear? Will industrial users suddenly stop needing it? Will supply magically increase overnight? Or will that pullback simply become another opportunity for institutions to add positions without chasing? This is why smart money stays calm while retail emotions swing wildly. They're not focused on today's candle. They're focused on where silver needs to be to balance demand over the next several years. And when you think in those terms, $120 starts to look less like a ceiling and more like a checkpoint. In part 2, we're going to talk about what happens next, how late-stage FOMO usually enters the market, and what signals actually matter if you want to avoid being the last buyer at the worst moment. We'll also break down how everyday investors can think more like smart money without chasing headlines or panic moves. For now, take a moment and ask yourself one question. Are you watching silver because you're curious, or because you're starting to realize this move might be bigger than it looks? If that question made you pause, that's a good sign, because curiosity is usually the first step before conviction, and conviction is what separates people who benefit from a move from those who only talk about it after it F's over. When silver crossed 120, something important happened quietly in the background. The conversation stopped being about whether silver could break out and started becoming about how high the next phase could actually go. This is where late-stage FOMO usually begins, but not in the way most people expect. It doesn't start with retail investors rushing in all at once. It starts with hesitation turning into urgency. People who ignored silver at 90 suddenly regret it. People who watched it at 100 start hoping for a pullback that never really comes. And by the time the media confidently explains why silver is the trade of the year, positioning has already shifted. Smart money understands this pattern well. They don't need perfect clarity. They need asymmetry. A situation where the downside is limited compared to what could unfold if the pressure keeps building. Right now, silver still offers that asymmetry. Not because it's cheap in absolute terms, but because it's repricing into a world that needs more silver than ever before. One thing that often gets overlooked is how confidence spreads in waves. The first wave is disbelief. The second wave is reluctant acceptance. The third wave is excitement. We are somewhere between the first and second wave right now. You can hear it in the conversations. People say silver looks strong, but they're still unsure. They say it's impressive, but they hesitate to act. That hesitation is the fuel for the next move. Another key factor is time. Markets don't give everyone unlimited chances. The longer silver holds above previous resistance levels, the more normal those prices begin to feel. What felt shocking a few weeks ago starts to feel familiar. And once familiarity sets in, higher prices no longer feel extreme. They feel justified. That's when the market quietly resets expectations upward. On Silver Reset, this is where we try to slow things down mentally, even when prices move fast. Not to predict exact numbers, but to understand positioning. If you wait for certainty, you usually pay for it in price. If you rush in emotionally, you often lose patience at the wrong moment. The middle ground is awareness. Knowing why something is moving and what would actually change the bigger picture. So ask yourself, what would truly invalidate the silver story right now? A short-term pullback wouldn't. Volatility wouldn't. Even sharp corrections are normal in strong trends. What would matter is a collapse in demand or a sudden surge in supply. And so far, neither of those is happening. In fact, the opposite seems to be true. This is why many experienced investors are less focused on daily price swings and more focused on exposure. Not all in, not all out, but positioned. They understand that missing the core of a move hurts more than riding through temporary discomfort. And they know that markets reward patience far more often than they reward perfect timing. If you're still watching silver from the sidelines, that doesn't mean you're wrong, it just means you're at a decision point. Not about today or tomorrow, but about whether you want to stay reactive or become proactive. Most people don't lose money because they were wrong about direction. They lose because they hesitated until the opportunity no longer matched the risk. As we move further into this year, silver is likely to remain volatile. Headlines will swing between excitement and fear. Prices will test emotions on both sides. That's normal. What matters is whether you understand the structure underneath those moves, because structure is what turns noise into opportunity. If you've been finding value in this breakdown and the way we approach these market stories here on Silver Reset, let me know by dropping a like and sharing this video with someone who has been confused or hesitant about silver. It really helps the channel grow and reach people who want clarity instead of chaos. And I'd love to hear from you in the comments. Do you think silver crossing 120 is just the beginning? Or do you believe the hardest part of this move is already behind us? Reading your thoughts helps shape future videos and keeps the discussion real. Whatever your view, remember this. Markets don't move to reward the majority. They move to surprise them. And right now, silver still feels like a market that hasn't finished surprising people yet. Thanks for watching. Stay calm, stay curious, and I'll see you in the next one.